Welcome to the beginning of technical analysis class, part 1. So let me turn the lights on in here so you can see me well. All right. Now, what I want you to understand is this is the foundation of technical analysis class, and we have to build on something strong. So we need to understand the fundamentals. There's no need to assume that you know anything. You can come in here as if you knew nothing. Your grandmother, your kids, anyone who may have started and they want to get a fundamental level of knowledge about technical analysis, this is the spot. So this is technical analysis part 1, and we will then build on with more and more technical indicators, but we have to build out this foundation. So I want you to download the Webull app, which is link number 5. You can get some free stocks to do that. And then once you've downloaded that, then you can go on YouTube and look up how to install the Webull desktop app, because this is what we will be using primarily for our technical analysis. However, this can be transferred over to other different sources. Also, if I have to re-record this video because they're drilling in my house, I will do so, and all Discord members will be able to see all of this at no additional charge to you. This is just for the Discord family. So now let's talk about it and let's learn. I want to build your foundation out as if you know absolutely nothing. And then as class 2, 3, 4 comes out, we're going to get more and more in depth, but I have to build out that strength on your foundation. So let's start here. Technical analysis part 1, Keen and Grace. You ready? Table of contents. Who is this video for? This is for absolute beginners or those who want to strengthen their foundation so they can stop making those mistakes that they've made in the past and just build out a solid foundation. Now, what is TA? TA is basically the acronym or the few letters for technical analysis, and we're going to learn how to identify trends so that we can make money. The earlier you identify a trend, the more money you can make, and that's why people do technical analysis, is so that they can say, here's a pattern. How can I make money with that pattern? What are the basics? Let's talk about it. So the first thing that you have to understand with technical analysis is the candles. So when you see these things on the chart, these are for candles. These are all candles. So what does a candle tell you? Each candle tells you basically 5 different pieces of information. Take a look at the bottom. You have to notice that I clicked on this here, which is D for day. There's hours, there's 30 minutes, there's 5 minutes. Every one of these candles is representative of a specific time frame. These candles that I've clicked on all represent 1 day. So then when you hover over, and you can see right here, I hovered over this candle, it tells me 5 different things. It tells me when did it open, and I'll explain this and I'll show you a specific example. It tells you the opening price, how high it got in that time frame. Remember, our time frame is clicked on the day. So what at the beginning of the day, what did it open? How high did it get in the day? How low did it get in the day? What did it close at during the day? And what was the volume during the day? So let's look at a specific example of a green candle. This is the body of a candle, this green rectangle. Now, imagine that this is telling us everything that happened in a day on this green candle. So the first thing you need to see is just look at the body. It starts on the bottom right here because it's green, but then it ends on the top. So the opening price, as soon as the day opened, this stock or whatever it is, cryptocurrency, NFT, or whatever it is, was $90 when it opened. At the end of the day, when this day was over, that's our time frame. It could have been an hour. It could have been anything like that. You know what? It was 100 at the close. So it opened at 90 and it closed at 100. However, you know what? Some prices were in between there. What happened during the day? We know during the day, the lowest it got was this wick, it's called. And this wick shows us that it went all the way down to $86. And then this top wick up here shows us how high it got in our time frame, which is a day, and it got to 112. So the whole story is read like this. This candle is green because it opened low at 90 and it closed high at 100. However, that wasn't all. It got as low as 86 and it got as high as 112. It's green because it opened low and closed high. Let's look at the opposite. A red candle. A red candle, and I really want you to show this to your kids or any other person who does not know how to read candles, because many people forget and skip out on the fundamentals. So check this out. This candle is red because the opening price was 100 and then it dropped by the time it closed to 90. So then the candle would be red. But what happened in between those time frames? It got as high as 112 and it got as low as 86. But it's red because it started up here at 100 at the open and then it closed down here at 90. And again, the opposite, it opened at 90 and it closed at 100. So that's why you get red and green candles. So let's check this out. Look at this trend. This is Apple. You can see that Apple stock is going up, 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 up. But you know what? This is an uptrend. But you have to know and think trends are identifiable. This is why we do technical analysis, because trends are identifiable. Meaning, if you noticed and you identified that this was an uptrend down here, you would have made more and more and more money. What if you identified it here? You would have made money, but the earlier you identify a trend, the more money you can make with it. This is why we want, and we have to believe that trends are identifiable. You think of a trend, you have to think of a pattern. Now, trends are identifiable just like patterns. Imagine that every time we saw this green box, we made some money. We see the trend, red, green, right? Or green, red, green, red, green, red. So every time we hit green, money. Once, twice, 3 times, 4 times. We identified it early. But what if we identified it over here? Then we could have still made money on this green one, but we didn't make as much. But the earlier you identify it, then you know that there's money to be made. You want to identify trends early. So now you can extrapolate out forward and say, what do I imagine is going to happen next? I got green, red, and then boom, green. So when you're doing technical analysis, you're trying to use what happened in the past, identify a pattern, and then use that pattern to then make money in the future until the pattern changes where you have to go and identify a new pattern. Okay, the red and green patterns are done. We're going out and we're looking at the blue. Okay, white, blue, white. You identify the pattern, and once it's done, you're done trading that pattern, and then you move on. So let's go on to further details. We have to understand a few key terms. For example, resistance. So our resistance line, take a look at Mario here. When Mario jumps up, this line, this level, this price, let's call it $10, resists him from going any higher. Whenever he hits this line, this level, this price, it resists and he comes back down. So this is a resistance level. But the opposite is true, where he's on top of that line. So let's say this price, this level, let's say it's $10. When Mario's price comes down here, it hits this level, he bounces off and goes back up. So this is our level of support, and this is our level of resistance. Okay, now let's see our first trend, because there are 3 trends. There's consolidation, there's an uptrend, and then there's a downtrend. These are our main 3 trends. So check this out. We have a high point, we have a low point. We have a resistance line, and we have our support line. But notice they work together like a channel, right? When you have these 2 bars work together, we're going to call that a channel. We need some solid, equal terminology that we can use. So this is called the channel. Notice that you can identify this trend. And remember, they tell you to buy low and sell high, right? If you notice the trend over here, and let's say you buy it low, it goes up to your resistance line, you sell it high, it comes back down, you buy it low, you sell it high, buy it low, sell it high. You are now trading using technical analysis in this consolidating channel. While everyone else is holding on to a stock or holding on to an option and it is trading up and down and up and down, you could be making money while you buy low and sell high if you identify the channel. And the earlier you identify it, the more money there is to be made using the channel with the resistance and the support. But let's take a look. There's not only consolidation, there's also an uptrend. We're all familiar with this, but you have to be able to technically identify an uptrend. So notice the stock starts off low and then it goes up and then it comes down again a little bit. But notice this is a higher low than this low. Oh, this is our first indicator of an uptrend. And then it goes up high and comes down low. But this low is higher than this low, which is higher than this low. So we have higher lows. And on the opposite end, we have higher highs. So we have a high and then another high, which is higher than this one. And then we have another high. So we have higher highs and higher lows, which is our uptrend. But you know what? We can use our support levels and our resistance levels, but now they're not consolidating left to right like this one. They're actually ascending, meaning traveling upward, right? So look at this. We put our ascending level of support, still those same bars. Support and resistance. This is what this is all about. Support and resistance and identifying a trend at the beginning of the trend. So we add in our support level and our resistance level, our ascending level of support, our ascending level of resistance. So now in this case, if we can identify this uptrend, the earlier we get in on the uptrend, the better, because we can make more money if we identify it early. But let's say that we miss our first shot and we see it going on an uptrend like this. And then it comes down and hits our ascending level of support. Okay, this is our level of support. It's going to bounce off of this, right? So then we can get in here, get in low and let it run up. And then it comes back down, hits your level again. This means that this channel is being respected. It didn't break out of your channel. Okay, now, so let's keep it going. Another kind of trend is a downtrend. So you see these, it says swing low and swing high. This just means high and low. So check this out. In a downtrend, down rockets, where the stock or cryptocurrency or NFT or anything like that is actually losing value. But remember, if you took the technical analysis class, you know, or actually the options class, you know that you can make money on the way down by buying a put option. So if you see a high and then the next high is lower, oh, this is a sign of a downtrend. So we have lower highs and lower lows. The lows are getting lower, the highs are getting lower. This is a downtrend. You can make money here. But remember, now that you're starting to see these levels, you can put them in a channel. Now we have not ascending lines of support and resistance. We have descending lines of support and resistance. So if you try to catch this wave down, then you can let it pop up to the level of resistance and then ride the wave down completely and just continuously ride the wave down until it breaks out of your channel. But as long as your channel is being respected, you are technically trading with technical analysis. You're not using your heart, you're using the chart, and you're trading within a channel that you found yourself. So now, let's keep it going. You have to remember, we had our resistance lines here where you're under it and it bounces down, but resistance lines can be broken. And then notice that if Mario breaks this line, he can now jump up here, right, and break the resistance. So let's keep it going. You have to understand as well, the support lines can also be broken. And this is when you buy the dip and then the dip keeps dipping. Because you know what? You thought you caught it on the floor, but then the support is broken. And like I said, you end up in what we call the basement, where it's even lower than that floor. Okay, so let's check this out. An uptrend can break. So we know that we have our ascending level or our ascending line of resistance and our ascending line of support, and we're trading in this channel, trying to make money in this channel. But then if it breaks out of this channel, then our uptrend is broken. So let's check this out. What is a first indicator that your uptrend is probably going to break? Take a look at this. Over here on the left, we can see an uptrend. We have a low, we have a higher low, and then we have a third higher low. The lows are getting higher. Let's look at the highs. We have a high, we have another high. So if we were just stuck right here in this middle point, before any of this over here happened, the second peak, it didn't happen yet, we would say, we might still be in an uptrend. But then you start to see that this second peak is about the same as this peak. Then this could be an indicator that there are a lot of sellers up here who are now adding selling pressure into the market and are about to crash it. So this will be your first indicator that this uptrend is changing and it's about to change into a downtrend. Your second indicator would be the low from before, it breaks, and then it's lower than that low. So this is called a double top. So in a strong uptrend, very, very strong uptrend, you get a sign, we have a top, and then it comes down and we have a higher low, and then we get a second top at the same spot or just about the same spot. And then it comes back down and then it breaks that previous low, the support level breaks, and then we get a sign that this thing is going to drop like a rock. And then the trend changes. On the other side of it though, when you're in a downtrend, straight up downtrend, where your highs are getting lower, your lows are getting lower, but then you realize that you get two lows that are about the same spot. Now this is double bottom, where if we break the uptrend, and in some cases, like I've heard it called many times, like a W. You look at this W right here. If we break past where the W is kind of started, then you get a break out of resistance and then you break up. So your downtrend can turn into an uptrend, and you identify it by having 2 points that are the same on the bottom. And on the top, this is a double top, this is double bottom. They work exactly the same way. Let's check this out. How can you get confirmation that your trend is working out the way that you wanted it to work out? One confirmation is volume confirmation, where when you look at the volume down here, these candles are telling me basically, oh, there's a lot of buyers. This is a huge green candle. This is a bigger green candle, so there are more buyers here. So then I'm getting confirmation that this uptrend is being true. And then you see even more buyers and more buyers. So then we have confirmation of our uptrends, right? So then you say, okay, I trust this. But if you saw the volume getting lower, like these lines down here, then this would not be a confirmation of your uptrend. So now, what are some limitations of technical analysis? False signals are a huge limitation of technical analysis. So imagine that you see this thing is uptrending here, and then you know that there's a line of resistance, meaning that usually the stock, the cryptocurrency, the NFT, whatever it is, comes up here and then it bounces back down. But then what if we break above it? This is usually a sign that now we can go above it because previous resistances become future supports and we could bounce on top of this line and go higher. But this is called a false breakout, which is a false signal, because then it jumped right back into the channel and then used this again as resistance before continuing its longer downtrend. So this is a false breakout. You have to watch out for those. Now, you want to watch out from it or for it by seeing multiple candles live up here above the resistance line. That will show you that it is now a support line. So now let's look at the other way, where we have our consolidation channel. Resistance line up here, support line down here in green. It's bouncing in between these levels, and then it breaks your support. But we only got 1-2 candles that lived below it, but then one jumped right back in. So we don't have enough confirmation to say, yeah, this support level is totally broken, right? So it jumped right back in the channel. But if it stayed below it, then this could give you some confirmation that this channel is no longer valid. And you would have to trade finding the next channel, which could be the downtrend. So remember, if you were to buy a put and this was not a false breakdown, then you would find the top of the put option and then ride the wave all the way down. Now, let's check this out. Other limitations to technical analysis are news catalysts. For example, Biden warns Putin that the U.S. will react decisively and impose swift and severe costs if Russia invades Ukraine. No matter what the stock market is doing, whether it's going up or going down, as soon as we find out, and again, none of this is confirmed yet, but if we find out that we were going to war, it would totally impact the technical analysis and could totally tank the market down, right? Or run it up if the big businesses were in the business of selling certain arms and tanks and weapons and things like that. So it would have a huge impact on the market, and your technical analysis that you were looking at with the breaks and this and that, then the technicals would just blow it out of the water. A great example of that would be something like this. Another news catalyst that would be positive, Apple. Let's say that Apple was going into a downtrend, and then all of a sudden they say, hey, look, we're dropping the Apple car early, and it has longer range than Tesla, way better battery, it's quicker to charge, it's safer, all of these great things. This would be a news catalyst that even if Apple was in a downtrend, it would turn into an uptrend. Or if it was in an uptrend, the uptrend would get even steeper and basically turn into a rocket. So there are great news catalysts, there are bad news catalysts, but you have to use them in technical analysis with what we like to call synergy. Now, the definition of synergy is an interaction of elements like news and technical analysis that when combined produce a total effect that is greater than the sum of the individual elements. So it means use technical analysis with the news catalyst, and then this will give you the results that you want. So check this out. It says that you have 3 people right here, and if they work together, then they get you the output of 3.5 people, right? Or even 4 people. But working together gets you a better result than working them alone. And you have to think of technical analysis just like that. So when you use technical analysis and you're looking at the charts, and then you hear great news and the technicals are also set up in a positive way, then you are likely to get what we like to describe as a rocket. So I love y'all. I appreciate y'all. Be on the lookout for the quiz for this technical analysis lesson, the fundamentals, and then be on the lookout for the review of that quiz. And also be on the lookout for part 2, which will basically be another in-depth lesson on past the fundamentals, but on actual indicators and different patterns that you need to look for. Like, for example, MACD, RSI, moving averages, all of those things are coming in future technical analysis class now that we got the ball rolling. But if you can't handle the heat of these hot stocks, then stay out of the kitchen and consider investing in the index funds. Again, family, we started technical analysis class. I want to see you win. Let's go. Take care.